This is question number 7 of practice homework 1. So here we're provided with a bunch of numbers from the income statement. In addition, you're told that the firm issued $6,200 in new equity during 2018 and redeemed $4,700 in outstanding long-term debt. So A, what is the 2018 operating cash flow? So we know that operating cash flow, the formula to get that is OCF equals, we start from EBIT, and then we add back depreciation, and then we deduct taxes. So depreciation and taxes, if we go back to the setup, that's provided. Depreciation is right here, and taxes right here. So in order to figure out OCF, we need to figure out EBIT. So then we need to construct the income statement. So we start from sales and just copy the number to Excel. And then cost of goods sold, which is just the cost. And then we have the other expense. Other expense is this number. And then we have the depreciation. Just copy the number here. So EBIT is simply the difference between sales and cost of goods sold, costs, and other expense, and finally depreciation. So this gives me the and then back to the formula, we need to add back the depreciation and minus taxes. So why don't we construct the income statement. So interest, next item on the income statement is the interest. So interest is right here. Hence the EBT is simply the difference between EBIT and this interest. And next item is simply the taxes. Taxes is right here. Just copy the number. And finally, that's my net income is EBT minus taxes. So OCF, that equals EBIT, add back depreciation, and minus taxes. So this is my final answer. Just copy that number back. Looks like it doesn't allow me to call back. Let me try again, see whether it works. So if it doesn't, I have to type the number myself. 73875. Okay, cash flow to creditors. So cash flow to creditors is cash flow to creditors that equals interest. Yeah, because the interest payment to creditors is positive, and then we have the net issues. Of debt. So when the firm issues debt, then the cash flow comes from the creditors to the firm. So hence, from the creditor's perspective, this is a negative cash flow or cash outflow. So then cash flow to creditors is simply the interest minus the net issuance of debt. And then back to the setup, we know the interest, and we're also told that the firm redeemed $4,700 in outstanding long-term debt. So that means the net issuance of debt is a negative amount. So negative 4,700. So that means cash flow to creditors is simply the interest minus a negative number, right? Negative 47,000. Just double check the number. Yes, 4,700, not 1,000. Yeah, why it's negative? Because this is redeemed. So redeemed is negative of the issuance. So we have to add a negative there. And then negative becomes positive, right? So eventually my, I have to type this, I guess. My cash flow to creditors is 19,400, and cash flow to to stockholders. So cash flow to stockholders, and then similarly, the cash flow to stockholders, first one is dividend, and then minus the net issues of stock. So let's go back to the setup. The problem said the firm issued $6,200 in new equity. So that's the net issuance of that stock. Hence, this gives me a cash flow to stockholders. We have the dividend. Dividend is right here, 12,000. And then subtract the net issuance of stock, which is 6,200. Yeah, so this gives me 5,800. So that's my cash flow to stockholders. And in addition to NWC, final part, addition to net working capital, and how could we solve this problem? Just on surface, the setup seems to not telling us any information from the balance sheet, right? Because NWC is current assets minus current liabilities, and those two items are from the balance sheet. But here we are only provided with the income statement. So how can we solve this problem? Addition to NWC. So we have to remember the part D, which have this further condition if net fixed assets increased by $30,000 during the year. So then we can use what we call a balance sheet, the cash flow identity. So what this means is if we add this equals to CFA, which is cash flow from assets. So cash flow from assets is the sum of cash flow to creditors and the cash flow to stockholders. And then we'll further know that cash flow to assets is the OCF minus the change or addition to NWC. and then minus the net capital spending. And net capital spending here, we can use the change in net fixed assets and then plus depreciation. We talk about another way to get the NCS is simply the change in the gross fixed assets. In this question, we don't know anything about gross fixed assets, so we can only use this formula to get this NCS. So now let me go back to my spreadsheet. NCS is simply the change, which is the 30,000 change in net fixed assets, and then add back the depreciation is right here. So that's NCS. Once we figure out NCS, and then the question is asking us what is the addition to NWC, this term. So we have already calculated the OCF, and CFA is the sum of, say, cash flow to creditors and cash flow to stockholders. So we can just add these two numbers. And going back to the spreadsheet, CFA is simply the cash flow to creditors and cash flow to stockholders. And then going back to here, so I can further from this equation and can actually solve out the change in NWC or addition to NWC. Just move this negative NWC to the left hand side and the CFA to the right hand side. So we need to change the sign for both. So now it's OCF minus NCS, this term, and then this positive move to the other side and becomes negative minus CFA. So the change to NWC is simply the operating cash flow minus net capital spending minus the cash flow from assets. So then we just change in WC is simply the OCF minus the NCS and then minus CFA. Yeah, why this is just not giving me. It's B11, yeah, and then it's minus. I typed as equal. Okay, it's minus, so it's minus B11 minus B14, which is NCS, minus B15. Just double check, and then that's CFA. That's correct. So the change in WC is 775. So go back and type that number in, 775. So now let me check my work. Okay, great.